Hi, everyone. Todd Rosenbluth of TMX VettaFi, and I'm so excited that you're joining us because we've had a record year in ETFs, and we're going to talk about not only the overall flows of what the trends that have been going on, but we'll dive into a few areas of specificity. I'm joined by my VettaFi Voice colleagues that I'll bring into each of these. But Cynthia, this is a record year for us in the industry. We've got about $1 trillion in ETFs that have flown in, almost $11 trillion in overall ETF assets, record for fixed income, record for individual ETFs. This has been tremendous.
Yeah, and it's amazing because some of the numbers I was just looking at flows, earlier this month, and I mean a single fund like VOO from Vanguard has taken more than $100 billion in 11 months because we still have roughly a month to go at the time of this recording. So it's the massive amount going into ETFs. It's really really impressive.
It's great. We've got a front row seat for that, working with asset management partners, with advisors on a day-to-day basis in terms of educating. And it's just been exciting as this team has grown. Also, the ETF industry has grown. A record year. We're setting the stage for a tremendous 2025. And I couldn't be happier to be part of this industry.
Ditto.
So I want to talk about one of the key trends and what helped us to kick off 2024 with a tremendous way. Roxana Islam's joining us. Roxana, Bitcoin ETFs, they emerged in the beginning of 2024, and it's been a tremendous year for them, right?
Yeah, and it was sort of perfect timing because we saw the spot Bitcoin ETF launch in January, and that was just a record launch. I mean, we had 4.6 billion in trading volume on that first day, and I think that really just set the stage for crypto ETFs, but also the broader ETF industry in general. It was just a very optimistic way to start the year, and that interest stayed throughout the year, and we did see a little bit of fizzling towards the summer when we had the spot Ether ETF launch, but I think in the back half of the year we really saw some of that interest return, and a lot of that had to do with the election and the new administration, who is, by the way, very pro crypto, if you hadn't realized. So there's a lot of things in the pipeline for crypto outside of the ETF launch, which I know as ETF investors were sort of short-sighted on, okay, the launch drives the price, but then what's next? We have a lot coming in the pipeline with this new administration, a potential crypto czar. We have a potential U.S. strategic reserve. We just have an all-around more crypto-friendly environment, which I think the investors are starting to recognize. I mean, if you look at how those flows have started to shape up year to date, it's been pretty impressive. Spot Bitcoin ETFs have seen 30 billion in net inflows year to date, and that's including the flagship Grayscale product, which had a significant amount of outflows. So if you exclude that, it's about 50 billion. And what's really interesting is if you look at that top spot Bitcoin ETF product, which is the iShares IBIT product, that itself has about 30 billion year to date, which is pretty impressive. Quarter to date, so if you're looking at the weeks leading up to the election, then this time post-election, that's 10 billion quarter to date. So it's just been this massive sort of reignition and interest on the investor side, and also on the issuer side, which I think is, maybe an even more interesting story if you think about it, because you have all these issuers sort of, I'd say throwing spaghetti at the wall to see what sticks. They're coming out with these new filings that are pretty innovative. I mean, it's a lot of leverage products, option-based ETF products. But we're seeing some interesting things in the pipeline. I think some of these spot ETF products are very interesting to me. We have issuers like VanEck, 21 Shares, Bitwise file for these spot Solana, spot XRP products. So, if you asked me earlier this year if those would ever be approved, I would say, maybe not. And now I'm thinking, anything could sort of happen this next year. So I think we're in for a crazy year next year in the crypto world.
Well, it's an exciting time. We've even seen some of the firms that have had success in the alternative or options-based space, like Innovator ETFs or Calamos, that are soon to launch risk mitigation ETFs, getting exposure to cryptocurrency in a more advisor and investor friendly manner.
Yeah, if I can chime in, if you think about 2025 being the year of Bitcoin for the risk averse. What a concept, because Bitcoin is all about risk. So I think we should see a lot of exciting product development, to Roxana's point.
We're going to talk just about another theme that was popular in 2024. And Cynthia, let me stay with you, Cynthia Murphy, on artificial intelligence. That has been a driver of the overall market, but also the ETF space, right?
Yeah, it's been, artificial intelligence has been one of the key themes really for the last 2 years. And, everybody's looking at 2025 as being year 3, and yet like very, very early stages. If you look at, companies like iShares, Goldman Sachs, T. Rowe Price, all of these firms are talking about how we are still in the very, very early build out phase of the AI infrastructure. We are a long time away from what the final phase, which iShares called the transformation phase. Goldman Sachs calls the enhanced productivity phase. And T. Rowe just calls the application phase, where we actually see AI changing the way we do things and changing productivity around, all sectors and industries. So it's a theme that has a lot of way to go. But what's interesting, if you look at asset flows, all of the money, most of the money has gone into your classic big tech, big growth, mega cap stories, or semiconductors. A fund like SMH from VanEck, which is a semiconductor ETF, took like almost $7.5 billion this year. So single stock, NVIDIA and semis leverage plays have done really well in asset gathering. Large cap tech, mega tech, growth funds have done really well. The really thematic plays are still just starting to break through the advisory channel. So like AIQ, for example, from Global X, which is their AI fund, has picked up about $1.5 billion. But we've seen also a lot of product launches this year in the space. T. Rowe with T-Tech, XAIX from DWS, X Trackers by DWS. There's been a lot of interesting product development, and I think we haven't even started really to see funds find these ETFs yet, and we're going to start to see that in 2025 as this theme broadens out. So I think it's going to be an exciting theme for next year.
Well, it shows the beauty and the benefit of active management in the equity space. You mentioned obviously Global X. There's some other index-based products, the Robo Global Artificial Intelligence ETF among them. But do you think active management is an area that's a focus for AI, Cynthia?
Absolutely. If you listen to the folks from T. Rowe, for example, they make a beautiful case about the importance of a portfolio manager that's out there, boots on the ground. They're traveling the world, meeting the heads of these companies. But there's also a lot of great index products out there, like XAIX is one, Robo, which VettaFi does index under it. And these are areas where there's beautiful index construction too. So I think there's room for everybody. It's just really delivering a value that, once the market catches on, that AI isn't just about NVIDIA and semiconductors. I think there's a lot of opportunity both on the index and the active side.
Well, thanks, Cynthia. Since we're talking about active management, Kirsten Chang, let's talk about active fixed income. That's really gained attention in 2024.
Yeah, that's right, Todd. What an incredible year it's been. Record inflows into fixed income ETFs. I'd argue bond ETFs have really been the stars of the show with this record year overall. We continue to ride out this golden age of bond investing, active fixed income in particular, really firing on all cylinders. More than $250 billion in net inflows into fixed income ETFs in 2024. That's the record, but roughly a third has been inactive. So there's still plenty of debate, obviously, across the duration and credit risk spectrum. And I think there's a little more uncertainty added to the mix now, given the Fed is looking to cut rates, but also maybe wait and see how fiscal policy shakes out in 2025. But no matter how you want to place your bets on the direction of inflation or interest rates, the rise of active fixed income products really has given us endless ways to slice and dice the market and fine-tune our exposure. And Todd, as you know, when we polled our advisors earlier at our fixed income symposium, 76% of them said they were planning to cut back their allocations to money market funds finally, right? And I think that opens up just a world of opportunity for bonds and a chance for them to really flourish in 2025.
Yeah, and we have some of the heavyweights in the overall industry moving in to the active fixed income space. A few names that come to mind, we've got Fidelity and T. Rowe Price, Neuberger Berman, but anybody you want to shout out?
Yeah, well, floating rate products continue to garner interest, I think, with all their flexibility. Morgan Stanley just launched a floating rate product that's been gathering assets, EVLN. Obviously, CLOs were a huge driver of loan demand last year. They continue to gain traction again this year. Again, these are floating rate instruments with low duration, but they've delivered the most attractive risk-adjusted returns, really, in fixed income over the past decade. Van Eck already had a CLO ETF, but they just launched a new one this year across a different tranche. They're betting investors are willing now to look for opportunities beyond just your AAA. Bond Blocks just launched a private credit CLO ETF. That's direct exposure to the private credit market for the first time ever for the average retail investor. So lots of exciting innovations and developments to keep an eye on.
It certainly is. This has been a great year in 2024. I've enjoyed working with each of you, and I'm excited for what's ahead for 2025, right?
Absolutely. It's been a privilege to have a front row seat and to take this ride with you all.
Exactly. I feel the same way.
Yep, I can't wait to see what's coming next year because I think it's going to be a lot of stuff that we don't quite expect.
It always will be. All right. Thanks, everybody. We'll see you in 2025.